example, it's important for you to realize that when you're earning commissions-based monies, commissions-based 1099 income, you being able to navigate a tax landscape without prior withholding taxes can seem kind of overwhelming come the end of the year, right? You got a great big number. Look at all the money that I made this year. Look how well I did in real estate. And then bam, if you didn't plan accordingly, if you didn't know how to navigate the wickets, you're going to hit a wall and you're going to hit it quick. If you're able to maximize legal write-offs, tax write-offs, as a real estate agent, it can become vital in reducing your overall tax burden. Deductible expenses is what I'm referring to, such as home office costs, vehicle expenses, marketing investments, professional fees. These can all significantly lower your taxable income. What we're going to talk about today is going to help you diminish these fears a little bit about, what do I have to do? How do I do this so that Uncle Sam doesn't hit me with a hefty bill come tax season? First, we probably better define for a lot of you, because there's a lot of new agents that follow the show, what are real estate agent tax deductions? Individuals and businesses are taxed at a certain percentage, and that's defined by their taxable income. You want to reduce the amount that you are taxed. You want to lower your taxable income as much as possible simply by using and deducting the expenses that are set into motion and set into tax law for us here in the United States. Uncle Sam's job is not to take every penny that you earn without giving you credit for what it cost you to do business. And that's kind of the simple formula. If it costs you that money to do business, if that's the cost of doing business in your business model, chances are there's a deduction or there's a tax credit to offset or something to that expectation given to you by the federal government. And if you're doing your taxes on your own and your taxes in real estate are complicated, suggest you consult a tax professional, right? We're not lawyers here. We're not tax advisors. We're not tax securities agents. We're certainly not accountants, but we deal with enough high power investments that we've learned a trick or two. So today we're going to talk about exactly that. And for expenses to qualify as real estate deductions, they generally have to be considered necessary or ordinary for the business context. Give you an example. If an independent farmer were to itemize their tax deductions, their animal feed, the food that they need to feed the animals that they're farming, is going to be deemed necessary and ordinary. The IRS sets specific criteria for what can be deducted for a business based on that profession and expense type. They've done years and years of research. They've done years and years of tax assessments with real estate agents. They know what makes sense for you to be able to do your business. So why should a real estate agent even claim tax deductions? Most agents working through a brokerage are provided a 1099 form, which means not only is this your commissions and they're not instantly taxed when you get them, but you're also considered a non-employee of a brokerage and you pay self-employment taxes on any source of income that you have. Therefore, you want to make absolutely sure to maximize as many of these deductions that are allowable for real estate agents so that you can lower that overall burden. Agents and brokers typically incur various expenses. Most of these expenses are related to business activities, traveling to properties, marketing listings, maintaining an office space. By you leveraging all of the available real estate agent tax deductions, you will be able to ensure that you're not overpaying on your taxable income. A little shout out to QuickBooks. Unless you're running a cajillion-dollar business, QuickBooks is a pretty easy and a powerful tool. It will significantly aid real estate agents managing their personal finances and tracking that tax deduction efficiently. This type of software is going to allow you to categorize expenses, monitor your income streams, store your receipts digitally. This keeps precise records through QuickBooks. It'll ensure all your deductible expenses are adequately captured throughout the year as you capture them. You don't have to try to figure it out at the end of the year. It's all ready to go. This can be especially helpful whenever you're preparing for tax season. The agents can quickly run detailed financial reports that way, and they can provide a clear overview of potential deductions. Let me throw this up in the air for you. A real estate brokerage is not responsible for claiming all of your deductions or giving you an itemized breakout. They are responsible for making sure you get paid the commissions you've earned. And typically, you'll get some kind of statement every time you close a deal that is the itemization record from the brokerage of how much business you have done. You should calculate that up yourself throughout the year and then break down what it cost you to get that business, to earn that business, to travel and maintain that business, to market that business. Every single one of those commissions had a cost of doing business. And that's what you should be concentrating on. Get yourself a scrap piece of paper, do whatever you got to do. But I'm telling you, software like QuickBooks is going to make it easy for you. So do not lean back on your broker. Put them under additional pressures because you don't understand how to break your taxes out. It's not their responsibility. They've got their own deductions and their own costs of doing business as a broker and a brokerage. And most of them that are active agents even have that additional stress as a 1099 agent form. So understand what's your responsibility and what's theirs. You're running a business. As a real estate agent, it's yours to own, manage, etc. You partner with a brokerage to get business done according to the way that real estate is laid out these days. So make sure that you're doing your job throughout the year so that when the broker gets you a 1099 based on the commissions that you have earned throughout your calendar year, it's going to be easy for you to break out your taxable resources. So what we're going to talk about today are some of the tax deductible items that maybe you are, but probably not thinking about that you should be tracking throughout your year. This way you can use these when you're filing your taxes at the end of this year. Check these boxes, make sure you're doing it. Make sure you're tracking these coming up for the 2025 season because these will help you a lot come the end of the year. So let's talk about some of the tax deductible items. Real estate agents will greatly benefit from understanding and using various real estate tax deductions specific to the real estate business. Those are the deductions that are tailored that'll offset the cost of real estate activities. These are inclusive of expenses for donations, continuing education, licensing, home office expenses. By taking advantage of these opportunities, agents can reduce their taxable gross commission income, your GCI, and lower your tax liability. So if you're wondering, what can a real estate agent write off? Let's break it down. The easiest one for everybody to remember is your home office expenses, right? Not everybody has to go to a brokerage every day to work. We're not an industry that has to be inside of an office to get things done. Certainly, there is a huge advantage and benefit to having an office to learn and train in when you're just getting into this industry. You being able to surround yourself with other agents that are busy trying to learn so that we can learn from each other. You can attend classes in person. You can meet with the brokerage and with the broker on a one-on-one and with some of their mentors and advisors has a great advantage to you, especially while you're growing and learning where in the industry you're going to be the most successful. But your home office that are added on your Schedule C, line 18 if you're filing, allows a real estate agent to deduct costs that appreciate with maintaining that home office, especially if it's your principal place of business, and typically it will be. Deductions like this one can include a portion of your rent or mortgage, utilities, insurance, office maintenance. And in 2024, agents were able to choose between a standard deduction of $5 a square foot at a maximum of 300 square feet for an office space, and itemizing the actual expenses based on the percentage of home used for the business. If you're using 50% of your available space, fantastic, you can do that. The next one you want to consider is your vehicle expenses. There's no way that you're just sitting on virtual calls all day long or working from your office 99% of the time when you're really in the throes of it and you're either showing properties or going out and getting listings ready. You've got vehicle expenses. Suppose an agent uses their car for business purposes. In that case, they can actually use a vehicle deduction. This is line 9 of your Schedule C. The deduction is only available if you're going to use that car exclusively for business. You can deduct the vehicle cost, you can deduct the mileage, you can deduct gas and any repairs up to $28,900 for this tax season. However, if you used it for personal and business, you can only deduct the cost associated with the portion used for business by considering a business mileage. So there's no cap on how many miles that an individual can deduct, but you do have to track them and you have to be able to show that it was business related. Next, marketing and advertising. Marketing and advertising deductions includes all of the costs related to a real estate business. This is digital advertising, print ads, billboards, promotional materials, advertisements in a local pizza place menu. All these expenses are 100% deductible. So agents can deduct all the costs of marketing their business. You need to make sure to include those deductions on your Schedule C also. Line 8, your agent postcards that we were just talking about a few weeks ago. You need to keep the receipts and you need to understand that that's a 100% taxable credit for you. Sorry, taxable deduction for you. Professional fees. We don't know everything. We can't do it all on our own. There are a lot of scenarios where we have to bring on a professional partnership to get a transaction completed. Agents can deduct any fees paid for professional services related to the real estate activities. This is also on your Schedule C, line 17. These services include your payments to lawyers, accountants, business consultants, other specialists who provide advice to you and services to help maintain or improve your business. As mentioned above, these real estate expenses must also be considered ordinary and necessary for them to be deductible. Professional development and training. Costs that are incurred from this, these also need to be able to enhance your real estate agent skill set, knowledge. These are fully deductible. This is line 27A. The costs may be included in activities like seminars, workshops, specific real estate designations, accreditations, courses relevant to the real estate industry. According to H&R Block, agents must prepare to prove these education activities will help maintain or improve the business. Good news, if you got some additional letters of accreditation behind your name, the work is done for you. All you have to do is bring a copy of what that accreditation is, how it's relatable to real estate, and it'll certainly show that inside of the description of what it was done, and the receipt, the invoice, showing not only what you paid for it, but if you renewed it every single year also. Let's talk about continuing education while we're on the subject. Continuing education needs to be completed in real estate to maintain your licensure. Although it's similar to the professional development and the training on the real estate side, expenses for requiring your continuing education falls under a requirement from the IRS. So this is an expense that's required by your employer or law to keep the current job. So the IRS specifies that an education expense like that, 27A, must not qualify the agent for a new trade or profession. This ensures that the education is directly related to your existing role, not expanding your education for like a side hustle or something like that. Agents who need to renew their license also will be required to take continuing education courses. These typically cost money. The CE Shop is a great option because of its Leap Learning platform. It's an online format, it makes it easy, it makes it quick for everybody to keep their education up to date. The platform includes features like progress tracking, flexible online access. It allows you to learn at your own pace, for example. These are all things that are a requirement for you to maintain and keep your licensing. Your 14 hours of continuing ed that is a requirement for your license to stay active is exactly what I'm talking about here on your continuing education breakdown. Next, this one probably is on the top of everybody's list: office supplies and equipment. Real estate agents can fully deduct the cost of business supplies and equipment essential for their business on line 18 of the Schedule C. Items can include everything from high tech, like laptops and cell phones, to everyday office supplies such as papers, pens, staplers. You have to keep those records. You have to keep the detailed version of those records and receipts on those purchases to maximize the deduction at the end of the year. But it's there. If you require a new laptop for your business and you're using it exclusively for real estate, this is what those receipts are for. Make sure you get one that is at an applicable standard for the business. It's beefy enough. It's business related. It's at a business build. That is not your typical $200 laptop that you're going to get from Best Buy. You're going to have to get a business edition that understands how to do a lot more work inside of Office and inside of online applications to be able to keep your real estate up. These are the things that you need to be able to consider when you're buying those. Can you buy multiple of these a year? You're probably pushing the elements if you're a single agent doing this, but what? New equipment every year for you so that you can stay at the top of what's necessary to be at the crux of your business. Yeah, makes total sense. And it's expected on your tax form. Travel expenses. So this is actually one of my favorites. Travel expenses for business purposes are tax deductible for real estate agents. This needs to be documented on line 24A of that same Schedule C. Deductible travel expenses include visits to properties, client meetings, industry conferences, expanding your businesses into other states, expanding your business internationally. Agents can claim costs associated with the transportation, lodging, other travel related expenses directly related to conducting those business activities. Which brings you to meals. Meal expenses are a critical component of gaining favor and access to clients. Taking out a client for a meal, attending a business related dinner, these can be partially deducted. Agents can claim up to 50% of the total cost as a tax deduction. It's best to practice keeping the receipts, write them down. Again, if you're using a software like QuickBooks, you simply pick up the app, you hit the receipt spot, you hit the picture, done. You're done. It's all filed, it's ready for you. And it's in a nice, secure cloud environment so that it's easy for you to access at the end of the year and send it straight to your attorney in that QuickBooks format. It is best practice to keep a copy of every single one of these receipts and write down on maybe the back of the receipt, if you don't have room on the front, who you had the meal with, what it was in record for questioning the future. Doesn't mean you had to close the deal. It meant that you were soliciting business to try to utilize them on a client perspective. No, you can't take your best friends out to eat all the time. But if you're taking your friends out because you're soliciting specifically real estate industry business, that deduction can be recorded on line 24B of the same schedule. You get where I'm going. If you've done business with Keystone or if you're one of our agents, you understand everything that I'm telling you. You are awake, you are out in public to do business. You've got business cards in your pocket at any given moment. You are out there promoting yourself as a real estate agent. That means that the efforts that you're procuring clients with is some level of deduction. Track it, maintain it, utilize it at the end of the year. Real estate license cost and dues. This is different than continuing education, right? On line 23, the costs that are related to maintaining your real estate license, those are the ones that are paid to the real estate board. Here with us at our biggest footprint at the Greater Tampa Realtors, the GTAR, as we call it, Stellar MLS, all of those fees and dues, boards, costs that you pay the brokerage every year to maintain membership, these are all deductible. These costs are due typically on a yearly or split over the year basis. They are a requirement for you to have your business open. It should be easy for agents to remember to include them in your tax filings. Professional insurance premiums. This is one that often gets missed, so I like to be able to talk about this every year. A lot of agents need to maintain an insurance premium like a professional liability insurance, also known as an E&O insurance. If you're a broker and you own a brokerage, it's almost mandated that you have this. And most of us get a policy big enough to protect our agents and the amount of business that our agents procure. The cost for insurance premiums are considered necessary because the business expenses and therefore business tax deductions should be added on line 15 for you. This is a big one. If you need to have a higher level of insurance on your car because you drive clients around, for example, that portion of that insurance is also deductible, and you need to make sure to have it broken down appropriately inside of your insurance billet so that it can be proportioned correctly on your tax form. One that a lot of agents don't even think about is your health insurance. Most self-employed real estate agents are not provided with any type of health insurance through their brokerage, and they have to secure their own policies. Health insurance premiums can also cover spouses and dependents in your family if you decide to purchase a group plan, for example. The expense is a tax deduction, and it should be added to line 14 of your Schedule C. It offers significant tax relief due to the high cost of healthcare, and it's a welcomed tax benefit for those of you that know that you need it, and the government welcomes it. Desk fees. This one's interesting. Depending on the brokerage that you're with, this is or isn't applicable for you. A lot of brokers require agents to pay what's called a desk fee for office space. When you're there using their resources, when you're there using the support services, sometimes agents may pay out of pocket so that they can deduct these fees from their commissions for this desk service fee. If those fees are deducted from your commissions, you as an agent need to remember that this expense is still occurring, and don't forget to document it properly on line 10 of your Schedule C. Professional memberships. Listen to that phrase as it exists. Professional membership. Any type of fees for a membership or a professional organization like the NAR. That's $156 per member in 2024. This is deductible as required to perform real estate activities. This is a membership fee, not a cost of doing business. The expense can be documented on line 27A. Professional memberships geared toward recreation, pleasure, social purposes do not fall under this category and are not tax deductible. But if it is a business club where you go specifically for the expectation of doing business, like we have here in the Tampa Bay area, yes, it is absolutely a professional membership, and it is a requirement for you to be able to do business. Not your golf club, however, which is recreational, as well as you may do some business there, but the business deduction that you should be taking in that case is if you bring a guest to the club and you had to pay green fees for them or whatever as a guest, that portion is what you needed to do to do business, not your every month membership to the golf club. I would be remiss if I didn't talk about taxable deductions as well for charities. Charitable donation tax deduction is not specific to real estate agent, but it does get considered. For an agent to use this tax deduction, the charity must be an IRS recognized nonprofit organization. And this may be a nonprofit that you do business with or that solicits business with you as in a local community, one of the food banks or one of the local ministries or churches in your area, or one of the VA halls. The donations must include cash gifts and any donations of goods or services. So just make sure that you have the proper documentation to show anything that has been gifted, essentially. So get a receipt, get acknowledgement letters from the charity. These are the things that are essential for claiming those deductions on the 1040 Schedule A. Some interesting questions this morning. We could go into all kinds of gray areas, but I prefer to keep tax deductions when it comes to real estate kind of black and white. These are the ones that absolutely don't get questioned. These are the ones that you should absolutely be doing. As a real estate agent, it's kind of wide open for you in business, as to how you can take deductions and take advantages as this business line, because it takes so much financing and effort to keep the business online for you to be able to do it. So I wanted to make sure to address that before I start hitting the questions this morning. So let's see what you got for me today. What records do I need to keep for tax deductions? Okay. Again, I'm a big tech guy, big software proponent. So I always make sure to use some type of digital capture for everything that I do. And we get really busy in this industry. Not only as a broker do I have to maintain records for myself, but I also have to maintain things that I do to help the brokerage. So mine's complicated enough. I take pictures and take notations of these things as they happen throughout the year. That includes receipts, deductible expenses, detailed miles logs for my vehicle, bank and credit card statements for collaboration purposes. These things are all essential. Also, you need to make sure to keep your tax forms like your 1099s and any W-2s if you're a payrolled employee, any relevant emails or correspondence that might support the deductions that you take. These are the type of records that should be kept for at least 3 years from the date of your filing to your tax returns compliance for IRS. It'll also help facilitate any potential audits that you fall into. Difference between a standard deduction and an itemized deduction. Yeah, good question. The difference between these two is primarily the method that you're using to reduce the taxable income. So the standard deduction is a fixed amount that's determined by the IRS based on your filing status, and it's adjusted annually based on the level of inflation. Contrast, items deducted while requiring listing an individual deductible expense, like mortgage interest, state local taxes, charitable contributions, medical expenses, those can exceed that threshold. So taxpayers usually choose the method that lowers their taxable income the most. So you can use the standard deduction, meaning, I'll just give you an example. I'm given $5,000 for the federal government for fuel, which we know that's not the case. If I go over that, then I would use my receipts versus the standard deduction, the one that gives me the best taxable credit. How long am I required to keep tax records? All right. Last IRS advisory that I had seen, tax records have to be kept from 3 years from the date filed. However, you file your tax return 2 years from the date that it's paid, or whichever is later. So if you underreported your income, for example, keep your records for 6 years. Ultimately, it's the easy thing. If you made it quick, if it was a simple form for you, 3 years will be sufficient from the date you filed it, not from the tax deadline, but from before that, right? If you file in the end of January, then you only have from that date 3 years later. If you are underreporting your income by that 25%, and then just save it for 6 years, the rule of thumb used to be save everything you need for 7 years, period. It's probably easier to remember, but if you want it broken down, that's what it needs. Ultimately, claims related for bad debt reductions or worthless securities, you need to maintain these records for a lot longer term. So any case where no return is filed, or you probably better keep things indefinitely, because these records are going to be recommended later. in closing, after you have completed your first tax return in real estate, the process generally becomes a lot more manageable every single year. A lot of real estate agents initially overlook some crucial real estate tax deductions, which is why we have this reminder course every single year. And it often leads you to overpaying a higher tax bill because you weren't able to understand what you needed to identify to take advantage of the things that are given to you by law. Agents can significantly reduce their tax liability by simply saving and staying proactive about these deductions and maintaining these records. Um, you should absolutely enlist in a good tax accountant and a tax strategist throughout the year because taxes change and the tax reforms change all the time. Um, we have a new president who is adamant about making some pretty serious tax changes, or at least making some pretty serious tax change promises to the American people. So over the next 4 years, particularly, I would say make sure you're working with a tax strategist. Your brokerage might even be able to bring one in to help give advisory services as a group. But then your tax advisor, the person that actually prepares your taxes for it every year, that additional signature is going to insist that you're keeping good records. And you need to have a basic understanding of what tax requirements are from the very start. So sit down with them, take the time throughout the year to look at your expenses, track things as they come up so you're not scrambling at the end of the year. Because I promise you, since the beginning of the year in real estate is the high season, last thing you want to do is be scrambling for records while you're busy trying to close 2, 3 more deals than ever before throughout your year, and potentially miss the deadline, costing yourself more headache and penalties. So take the time, keep an eye on your expenses, just keep an eye out for these deductions so you can safeguard for any future financial surprises. Good business for all of you. I know we've got listings are popping here at Keystone right now. We've got a lot of new stuff. I have got new blue folders across my desk. So business is good and consistently picking up. Our agency is doing well. We are happy to be of service to any of you as real estate agents that want to be able to go to the next level of your career. And any of you as clients that want to know more about investing with the Keystone Group, please don't be afraid to slide into my DMs and have a good conversation with us here at Keystone Group. We appreciate you all very much. Have a great week and do good business. Bye-bye, everybody.